Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll tell you all about the closing action of the stock markets. We'll also help you understand the sectors and the stocks that are buzzing in trade. We'll also be joined by an expert to give us a macro view of what do the markets really look like and what should be your investment strategy going forward from here. Let's quickly first look at how the markets are trading at this point in time. What started as a down day is slowly and gradually moving up at the highest point of the day. The Nifty at 0.2% up, 18,522. Look at the kind of move that we've seen in just the last half an hour odd, and we are inching very, very close to that all-time high level for the Nifty 50. We've already seen the record levels being seen on the Sensex, 62,342, 68 points up for that one as well. What's also helping the major indices move on the upside? Well, you can see a whole lot of names like and sectors like realty perhaps. That's the one that's shining bright in trade today. Media stocks are up and bright. IT stocks have seen a recovery. Pharma stocks also inching higher. The Nifty Bank in the red, but largely because of the financial services. But if you see, is the PSU banks and the private banks that are slowly inching towards the green as well. It's the auto space that's also buzzing in trade. In the top gear, the Nifty Auto up by 0.8%. That index is also helping the overall mood getting lifted in the markets. In terms of the advanced decline ratio, you actually see the Nifty seeing about 28 stocks in the green, whereas 21 stocks are down in the red. What comprises of the top 5 gainers list as far as the Nifty 50 is concerned? Well, you'll see some of the auto names like Tata Motors up by over 2.2% odd. Reliance Industries has actually climbed up 2618. That's the kind of level you're seeing. So the heavyweight counters supporting the markets. HDFC, Life, Coal India, IndusInd Bank now also in the green. So some of those losers are also inching up higher in trade. The pressure on the FMCG pack, and therefore you're seeing counters like Nestle, ITC in the red, Britannia too slipping away. The major banks, ICICI Bank, Kotak Mahindra Bank, are seeing on the downside, and also Polo Hospital seeing some profit booking after those 3 or 4 odd sessions of continuous way on the upside. Adani Enterprises down in the red, 0.6% odd. There's news flow right there, which we will speak about in just a bit. Let's welcome our guest for the day. Nitin Raheja joins in. He's the Executive Director, Head Discretionary Equities at Julius Baer Wealth Advisors. Welcome, sir. And thank you so much for taking the time out for this discussion. First up, I have to ask you about your market outlook. We're sitting at record levels as far as the Sensex is concerned, and even the Nifty Bank. It's just the Nifty that's remaining with just a kissing distance towards those all-time high levels. And we have the entire December still left as we talk about this calendar year. Do you see that Christmas cheer will spread across investors' portfolios after that entire roller coaster ride that we've seen so far in 2022?
Well, on the cost, if you look at what we are seeing presently from a absolute strength in the market perspective, I would think that if this trend continues, we should have, new highs happening in the index in the near term as such. So, yeah, I mean, the liquidity levels in the markets have been very, very strong, both domestics and now even FPI is sort of coming up. So I think that's sort of, driving these markets. And also the fact that, fundamentally, India has never looked better.
Right. Also, sir, do you see the momentum that we are building on towards the end of this year will carry on in 2023? Or would you call for some caution now amid the recessionary fears, the slowdown fears globally that we are looking ahead in 2023?
No, I mean, look, where we stand from a market valuation perspective, right? Some level of caution is most definitely advised. I mean, if you really look at our markets, the way we are poised today, and if you take a last 20-year scenario, we are in that zone where we are neither very overvalued nor are we very, very cheap in terms of our current valuations. Is there an upside to the market if one looks at on a 1 year, on a FY24 forward basis? Answer is clearly yes, right? Is there, can the markets correct? Surely, but if you ask me, this is really a buy on dips market that we are looking at.
Okay, a buy on dips market. But I also have one more question on the outperformance that India has shown in 2022 versus the global peers. Do you see this phenomena continuing, whether or not there are volatile moves, whether or not the economies worldwide underperform? Will India still continue to outperform?
Look, in the short term, maybe, not. I mean, if China were to sort of, come out of its absolute zero COVID policy and and they are placed in a position where they could see some amount of impetus in the economy take place and some measures by the government. So you could see, and the kind of correction that Chinese markets are seeing, you could see some element of the Chinese market do well in the shorter term, more from a relative perspective. But I think clearly, if you look at it from a fundamental perspective, uh, India seems well poised. I think I will not be surprised if even going into next year, we land up having the fastest growth rates in the world. So I think, short term aside, I clearly see the long term performance of the markets remaining strong.
Okay, understood that. Mr. Reja, stay on with us. We'll also focus on a few pockets that are buzzing in space, and all eyes are on HDFC Twins today because both the parties' shareholders have actually met today to discuss the merger and the road ahead going forward. And at an event recently, Chairman Deepak Parekh also said that the merger with the lender will actually hit completion by April of 2023. Now, do remember the NCLT had also given a go-ahead to both the parties to seek approvals for the merger from the shareholders as well. Anand Adhikari, Managing Editor, Business Today magazine, now joins in to shed more light on this entire process. Anand, help us understand, what could be the next step that you believe in terms of regulatory approvals now HDFC and HDFC Bank will have to undergo?
So, Sakshi, the merger announcement happened the April this year, and now the merged entity is in the process of taking approvals. So today, what happened? There was a NCLT convened shareholder meeting of HDFC Limited, which happened at 11 o'clock, and 2:30 currently. I think the HDFC Bank meeting is going on. So the result of these two meetings will come tomorrow. Okay, and HDFC has already got approval from other regulator, the PFRDA, the IRDA, because the insurance subsidy is under HDFC Limited. The PFRDA, the subsidy has a regulator, as PFRDA, then CCI, then SEBI. And now I think the mutual fund will go to the unit holders, for an approval. So this process, I think, like Mr. Parekh said, by April, they will get all the approval, but the final approval will come from the RBI. So when they will get all the approval, and then the RBI will give its approval. So by April, I think like Mr. Parekh said yesterday, we are expecting the approval by April, final approval by April.
True, absolutely. We'll also be looking forward to those developments. But, what in your sense could be a big challenge that HDFC and HDFC Bank together as a merged entity could face? We've already seen HDFC Bank as an underperformer in the market so far. We've only seen this news slightly start to give momentum in the last week or so to both these stocks. But going forward, what could be the clear challenges?
The biggest challenge is on the growth side. If you see the SDFC, the growth journey in the last, let's say, 2 decades, they have always grown at 20 to 25%, in terms of assets, in terms of their loan book, in terms of income and profit. Now growing, the merged, book, which I think at the time of the merger was around 18 lakh crore. Now it must be more than 20 lakh crore. Now growing that book at 20-25% is a big challenge. My expectation is that they will grow maybe around 18 to 20%. So to that extent, we'll see. I'm sure the price already must have corrected, but there's a expectation of around 18 to 20%, for the book to grow. Now, if you come to the business part, the second big challenge on the liability side, because SDFC, was NBFC, and they had market funds and short-term funds. Now, as a merged entity, the burden of raising resources will come on the SDFC side. So they have already activated, the liability or the deposit engine, but they have to raise, maybe 80 to 1 lakh crore of, liabilities, every year. So there I see, another big challenge. A third on the corporate and the retail side, if you see, SDFC was always more retail, maybe 50-55% retail, and the balance was the corporate, the MSME and other, working capital and all. But now in the last two pandemic year, the corporate become 55% and retail now 45, So will SDFC take big bets on the corporate side? Though they have a balance sheet, large balance sheet, even their announcement, they said, they will do infra and the large ticket side loan. That's something we have to see. Similarly, on the MSME side, they are currently, if you see the last 1, 2, 3 years, MSME book is growing in a big way, 20 to 30%. And that's where we have seen the maximum NPA in the industry. So MSME is another, big challenge. And, other thing which HDFC keeps saying is that, currently, I think 1/3 of their distribution network is selling home loan, and only 2% of the 70 million customer with the HDFC Limited they have relationship with the banks. They think there's a huge runway to grow, but we have to see all these things.
Sure. Absolutely. Well, thank you so much for those news points, Anand. But stay on with us. We also have to come to you for another news pack as well. I'll just take one quick reaction from Mr. Raheja on this entire merger that's taking place, the challenges that you've highlighted, and what could this mean really for the overall banking space. Mr. Raheja, your thoughts on the merger and how is it likely to impact the space as a whole?
So I think, if you see the government in one of its statements very early on talked about creating global sized banks. And towards that effect, they started the process of merging a few public sector banks and creating larger banks. I think in the private sector, we are starting to see something similar with this merger happening. I think we are going to create, a very large, financial, lending conglomerate out there as such. I think from that perspective, we know that this is a management which is aggressive by nature, clearly on a bigger book size. The kind of growth rates that it has been associated with will not happen. But I think we are already seeing that in the last few years, right? So I think I sort of tend to concur that the growth rates might be anywhere between 17, 18%, and so on and so forth. But I think it's beneficial. I think it'll probably land up being a win-win situation for both.
Right, absolutely. There's one more news point, and let me just delve onto that as well. From one conglomerate to the other now. Billionaire Gautam Adani-led conglomerate Adani Group's flagship firm Adani Enterprises Board of Directors has approved 20,000 crores rupees of fundraiser through the FPO process now. Anand, could you help us understand what could be the purpose of this fundraise going forward? What could it mean for the group as a whole?
So, Sakshi, Adani Enterprises is a holding company of the group, and it operates like an incubator. Over the years, if you see, they have created unicorns like right from Adani Transmission, Adani Power, Adani Ports, Adani Green, Adani Total, and even Adani Wilbur, most recently, the company which we saw in the public market. So all the 6 companies, they came out from Adani Enterprises Limited. So Adani Enterprises is the flagship and is the incubator. Now, if you see their recent announcement, they announced some 150 billion investment plan, for the next 5 to 10 years. And 70% of the fund, they stated that will go to energy and utilities. So if you look at Adani Enterprises today, they are setting the next set of businesses for the future. And I'll list one by one.
Sure.
One is green hydrogen. They are setting up the entire ecosystem, of green hydrogen, right from, the solar, the equipment or the component part to the downstream product like, green ammonia and, green fertilizer, to the, green hydrogen. Then let's come to the airport part. They already have, I think, 7 to 8 airports today, including the Mumbai airport, Third, if you look at the roads and highways, they are building a business on the roads and highway side. They recently bought, some assets from Mercury, and they have big plans on the road and highway side. Okay,
sure.
Look at the data center. I mean, and again, the kind of plans they have. Some they are planning, to have data center in some 15, 16, cities. Chennai one, they recently commissioned, and even they got Flipkart as one of the customer. And then you have, the defense and aerospace. Recently, we have seen, they acquired one of the big, this MRO company. So if you see, the next set of businesses with the Adani Enterprises building, they will need money. And I was just looking at their market cap. If you see the market cap, it's around 4.4 lakh crore, and raising 20,000 crore with some estimate will be 4 to 5%, dilution, which I see. And even the funding part, Sakshi, if you see there, a lot of people raise this question on the debt side.
Yes.
But see, 40%, I think 38 to 40% of their funds come from the bonds, which are long term. Okay. They have long-term assets and they have raised long-term bonds, and the bank funding is around, I think, 25 or 26%. And here also it's a good move to and then the pledging. I mean, it's a very low pledging in the Adani stocks, if you see. I mean, their P's are high, but if you see the pledging, I think is one company 16%, and other companies I have seen is 4 or 5%. So raising money through equity is a good route. I mean, their stocks are doing well, and this is the right time to raise equity, and they are not depending on bank funds. I mean,
Correct.
bond, then 20,000 will easily come from the equity raise. So I mean, I see it's a good move, but yes, in all these businesses they have to execute. There are big plans there, but yes, we have to see when they will make net profit. I mean, they all are EBITDA profits, some of these businesses, but yes, we have to see how these businesses pan out going forward when they will pump in money.
Absolutely, absolutely. Fair point right there. Thank you so much, Anand, for sharing with us all those insights on those two conglomerates and the news developments right there, and how could it really impact the businesses and the share prices going forward. Mr. Reja, let me come to you for a reaction on not just the fundraise, but Adani Group as a whole. We do know in 2023 it's been an outlier, performed well, and created wealth for investors, perhaps like no other conglomerate right there. There have been expansions, the newly listed ones, the old listed ones, all of them have performed very well. In fact, if I noted correctly, Adani Power has been the top gainer of the BSE 500 index in this 2022 with a whopping about 250% kind of a return. We've seen, in fact, not just one, but the whole of Adani Group as the biggest wealth creator, all the 7 stocks are, in the positive, with even Adani Enterprises and talk about Adani Transmission up by almost 100% in this year so far. Your thoughts on the conglomerate, the way it has moved going forward? Does it now raise any caution points, keeping in mind the way the financials are, the debt position is, and how the company is now for raising funds? Or do you still believe that the company and the group as a whole has enough potential to grow further?
So, while we don't really comment on stock specific, but, I can only say that a lot of these businesses are futuristic. They are more infrastructure oriented in nature. And all these businesses are really long gestation businesses. So
Right.
in that sense, as long as the asset liability mismatch is managed well, for example, like your colleague talked about long-term bonds or even equity, I think as long as that is managed well, I think we should be fine.
Okay, understood that. Well, now let's move on to another buzzing topic, and that is on the new age tech stocks as well. Mr. Reja, if we remember correctly, exactly a year ago, there was a mad rush for these new age tech stocks. Everybody called it the new tech rush. Not just fintech, consumer tech as well. Now, just a year later, everybody wants to sell these Nykas, Paytms, Zomatos of the world, Policy Bazaar. Nobody wants to touch them at this point in time. These are the same guys who actually bought about 80-90% higher and are selling at distress levels. So, help us understand, what do you really make of this new age tech stock space, and what is in it for the retail investor to really take an eye on, keep an eye on?
So look, whenever there is euphoria, whenever there is cheap liquidity and cheap money available, you do see newer businesses being built and cultivated, and you see exuberance in valuations at that time. Okay, now, it was not necessarily right at that time, and what's happening today is not necessarily completely sort of, in terms of prices. Were they
Sure.
were really euphoria there? I think the most important thing is, clearly out of the pack of these new age companies, there are some of them who have business models, which are, in the nature of, which will probably sustain very strongly over periods of time, and also good quality managements. I think some of these managements are using this time to, manage their costs. In fact, now, if you talk to most of these companies, right, they talk about a path to profitability, which was never the case if you went back last year. It was about market share, it was about GMVs and growth. I think so. I think and if I have to sort of give you a sort of anecdotal corollary to this, in 2000, in the last tech boom that we had seen in 2000, we saw a number of companies such as the Amazons of the world come up, and the Googles of the world actually come up. And then when we saw the whole correction, the tech bubble burst in 2001, 2002, some of these companies who had good business models actually became stronger, and they actually garnered more and more market share. I think we have to look at it similar, anecdotally is happening now out here. We had our own tech bubble and boom last year. And now that that has burst, you're going to see some of these companies emerge and become the giants of tomorrow. I think clearly, you just have to pick and choose which of these you believe has the right business model and the right management. But don't forget that the kind of wealth that post the correction of 2000, 2001, that was made companies like Amazon, Google, and so on and so forth was stupendous. And
Yeah.
I think that's what is probably what we are going to see over the next few years here.
Okay. So going into 2023, help me understand what will be your preferred sectors that you are more bullish on, what will make money for investors in 2023?
So look, we primarily like to play we like three themes that we think are building out in India, right?
Okay.
So I mean, primarily the first and the most bullish theme, which we are yet continue to remain bullish on, is financials. We think financials had a good 2 or 3 years of underperformance post 2018 and
Yeah.
the IL&FS crash, and a lot of them used that time to build out their balance sheets, to clean up their balance sheets, raise capital adequacy norms. And now that the economy is doing well, you're seeing credit growth being very strong. You will see the kind of rally that we saw in the last few months in financials, I think, pan out and continue, right? So you've already seen one leg of a rally where you've seen multiple sort of re-rating happen. But I think going forward, you will get benefit from the growth aspect of that. And so I think financials clearly are today the place where you have the maximum visibility and valuations are not euphoric. I think the
Okay.
other of it is manufacturing. I think we like and we are seeing increasingly more and more capital investment go towards manufacturing. And so, and it's we are helped by global factors, and so I think you're going to see that pan out. And so there are many ways to play that, right? Through the industry that you are focusing on, or you can play it through the ancillaries like the capital good manufacturers, or you can play it through the machinery manufacturers and so on and so forth. I think that's another story which has got very strong legs and will play itself out. I think the
Okay.
third story that we like is technology. We think technology has corrected. It's intrinsically a long-term story. We think the kind of consumption boom that gets created by employment in this sector is going to see whole the domestic consumption play out there very well. So whether it's real estate, whether it's home improvement, whether it's building materials, I think that whole sector will. So I think so broadly, we think these are the three big themes that are going to play out even in the next year as we go.
Sure. Just last question to you, sir. Help me understand what is, as a strategy, would you really recommend retail investors to adopt to generate alpha in the year 2023?
So I think very clearly, you should stagger your money over the next 6 months and invest, because you are going to get bouts of nervousness. You are going to get this volatility continue for a little more time, and you should use that by sort of systematically investing. But most importantly, from a retail investor's perspective, look, I think the longer you are invested, the more you are getting the odds to favor you to make money. Because the only cure to short-term volatility is long-term investing, and I think that's what we believe from a retail investor's perspective. So you either choose a good mutual fund manager or a mutual fund to go in, or if you have the ability to pick stocks yourself, then do that, but with a longer tenure of horizon. Because at these levels, I mean, trading can be a zero-sum game.
Okay, understood that. Well, thank you so much for being with us, Mr. Raja, and
Thank you.
sharing with us all those insights as we look ahead into the markets 2023. Hope to catch up very soon with you as we prepare for the new year as well. Many thanks for tuning in.
Thank
Okay,
you.
let's quickly look at how the markets are closing in today's trading action. If we see, it's been quite an interesting session because the first half clearly was down in the red. But as we go home, we are going home with some gains coming about. Talk about the Sensex that's ended with 20 points gain at 62,293. Just flat with a positive bias right there. 18,512, 28 points gain for the Nifty. So that one has done slightly better Also, when you see the other indices, let's also look at how the Nifty bank has shut shop. That is the one that actually felt some pressure building up after those gains came in right in yesterday's trading session. So we've not managed to close above that 43K mark, 42,093 and 91 points of a cut right there. Financial services clearly under pressure in today's trading action. But, good so far that the bulls are not leaving the ground as of yet. We are holding on even as we start off this new series that has historically not really given that many returns. But there are hopes tied up that the Nifty will definitely inch towards those all-time high levels. In terms of the sectors that go home with a lot of gains, it's the auto space that's the top gainer, along with the realty index. In fact, the realty index is up over 1%. The auto index up by almost 0.8, 0.9% odd. The media stocks are up in trade. Metals, pharma, IT, all of them gain. What's not done well? Clearly the Nifty bank pack. It's all the financial services, PSU banks and private banks all end in the red in today's trading action. So which were the top gainers that have ended the day with? So it's Tata Motors, HDFC Life, Coal India, Reliance Industries and IndusInd Bank as the top 5 gainers on the Nifty 50 with gains of almost 1.3 to 1.5 odd percent to 2.5% uptick for Tata Motors. That's the one that's gained on the top list. On the losing side, you again have those FMCG bank majors not contributing to the rally. Some profit taking coming in place as far as the Apollo hospitals and Adani Enterprises right after the news flow of fundraise comes about. 0.6% of a loss right there for that one as well. You can actually see on your screen is the consumer tech companies and also some of the FMCG majors that are down in trade. SBI also seeing declines of 0.6%. Tata Consumer, Apollo hospitals all down by half odd percent in today's trading action as well. You do have HDFC Bank and HDFC, both of them after this news flow also seeing some subdued move on the downside, 0.5% of a cut right there. Okay, so with that, we wrap up this edition, but do stay tuned on to Business Today TV for a whole lot more news coverage on both business and stock markets as we close this session, and hope you all have a great weekend. Don't forget to stay in touch with us via our social media handles, which will be buzzing all through the weekend as well. Facebook, Twitter, LinkedIn, Instagram. Continue to engage with us. Let us know what you want to, really understand in terms of markets, and we will definitely build some special shows on those as well. Thank you so much for tuning in.